Hey Alpha Fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we are going to go over the setup on the Bitcoin chart as we prepare for the FOMC meeting tomorrow, where Jerome Powell and the Federal Reserve will decide how many basis points to increase interest rates by, which could just send markets down if it's 75 basis points or more, and it could just rocket markets if it's 50 basis points or less. Of course, 75 basis points could just go flat, because 90% of the market already expects that. But it's just not the best news. The market really would like to see 50 basis points in order to skyrocket. Guys, we do see this kind of rising wedge forming on Bitcoin, and so you will want to pay attention to this diagonal and also this diagonal for reasons that will become apparent. Basically, we do have a high likelihood of breaking down from a rising wedge, and the measured move is pretty much the distance here, so we could basically grab the liquidity at these naked candles down here, but they don't tend to break down right away. And so, if we are getting a little bit of a bounce, we could come as high as 21,000 before we end up just doing this kind of a third peak here and then breaking down, kind of shocking people. And so, just watch out for shenanigans in the chart. Let's go ahead and throw on the good old momentum pools there. And we can see that, the other day we did just get on top of the alpha momentum pool and we did just a pump. We've kind of been meandering down ever since we made that double top essentially. And, we're stuck in the next, alpha momentum pool after just kind of coasting above, kind of coolly above the 2 to 5 day projection over here. And, now with the new alpha momentum pool that I've set up for today, you can see that we are just meandering on the inside of that one as well. And what we really need to do is get above 20,500 to have any semblance of bullishness, which basically, the move would be to 21,000. And of course, the 2 to 5 day projection does give me a little extra wiggle room if we just kind of hung out here. We really wouldn't want to violate this diagonal, but as long as we're just in the upper half of that 2 to 5 day projection, or just maybe just kind of a fake out wick, then probably no issue. But you can see that 20,500 is a pretty serious number there. If I do go ahead and throw on our, previous alpha signals, just for truth and advertising, you can see that we never got above my bullish bias. In order to be bullish, I said we had to get above 20,830, and look where we wicked to, right? We didn't even get above, we didn't get any candle closure above that, and we also didn't get any candle closure below my bearish bias. So again, guys, just for transparency's sake, the alpha momentum scale over here and the alpha momentum pools are just killing it. We're doing a great job. It was suggesting just sideways and, maybe just kind of leaning a little bit bearish, which is true. We've basically been hanging out on the low end of that. If we go ahead and update those signals for today, you can see that, again, we don't get a bullish signal until above 20,515. We're going to be uber bullish above 21,100. This uber bullish and the uber bearish are kind of judgment calls. These are highly calculated here in the middle, but the extremes are just kind of judgment calls on my behalf. But essentially, what I'm looking for here is to get above this rising wedge, and then we have the chance to continue to go. As long as we're inside of this rising wedge, I think we have the risk to the downside, guys, okay? So we really do have to defeat this formation if we want to be uber bullish. But just for a bullish bias for the day or the next couple days, then as long as we're above 20,515, then at least we could be pressing on up in this formation. And of course, you can probably front run that around 20,490. But just watch out. That's only bullish-ish. And then for bearish-ish, under 20,440 is kind of a front run to the downside. You can see that we just wicked under there, but we immediately came back up. So what does that mean? I don't know. It just means that my bearish-ish level is really working well. Because how did we get like that wick right to that move? I mean, it's just incredible how this system is working out. And then you see it didn't violate my bearish bias, which is under 20,300. And so if we do lose 20,300, then I would be quite bearish that we've lost all of our daily momentum. And then if we do end up falling and we breach 19,770, we're going to lose some critical momentums for some higher time frames. And so that also will be just suggesting that we have perhaps a deeper way to fall. And so if we do end up just breaking down from a rising wedge, I hope it's just a flash wick and then we get back up here. If we do end up closing 4-hour candles down on this side, just pressure is going to be significantly to the downside because of our loss of momentum. So guys, again, the FOMC Federal Reserve decision is tomorrow. Markets could skyrocket, markets could just dump, and of course, we could also just go sideways with kind of a neutral action if it's 75 basis points. But, that was your alpha for the day. Stay safe and happy trading.